Bitcoin has rejected the most important level of all, and in today's video we're going to be looking for clues across the higher time frames for what is most likely to occur for Bitcoin next. Welcome to Bitcoin Escape Plan. If you enjoyed the analysis, then leave a thumbs up and subscribe to the channel, and if you want a personal reminder of the levels that matter most every day in your email, then go subscribe at bitcoinescapeplan.com. Alright, let's get into the video, guys. So first and foremost, we did have a really important interaction over here that I broke down briefly today in the 4-hour break room. That's my private membership. You can get more information about that in the description down below. Basically, what I was saying is we were getting a decent amount of movement on the lower time frames towards another 64K retest. I did think that it could potentially get a move higher than that, but it doesn't look like it at the moment. It looks like we got rejected here at 63.9, here at 63.8, just below 63.9. And then when we did initially tag above the 4-hour SMA itself, still capped out just below 64K. So at the moment, we had a stair-stepping pattern where we got rejected off of 64.4 multiple times between Tuesday and today, Thursday. Had to really dig deep to realize what day it was. So 64.4 was rejected twice. That is a level I had talked about quite a few times. As well as 64.2. 64.2 we really only had one interaction with, but that is kind of where these two candles started the move down to trigger whether or not 64K is still being regarded as support or resistance, and you can kind of see for yourself it's pretty clearly resistance at the moment. Now, nothing really preventing this from flipping over, but this is what we've been talking about for a while. I would say more predominantly on the daily time frame, but I'll touch on it briefly real quick here, which is a crossover from the 4-hour SMA or daily SMA and the bottom band of the downtrend anchored VWAP. If you have no clue what I just said, go over here to courses. I explain that tool in more detail. So I have been watching this more on the daily time frame than the 4-hour, but it is important to note this, when the price was rising, it was able to get the SMA itself to rise above the bottom band. This is healthy for the price. It allows us, this is again, subscribers already know, I refer to this as a magnetic wall, not a concrete wall. So it is able to pass through it, and typically it'll spend a little bit of time and then kind of get like catapulted essentially away from the band in whichever direction the price has decided is the dominant direction, which in this case was bullish until such a time that we found resistance at 65.5. And then we have been trending down since that moment. So again, I had called out 64.4 and 64.2 both in the membership and here on YouTube as important levels to pay attention to for support or resistance. Us seeing those tagged multiple times as resistance just kind of gives more credence to that 64K level itself, which you guys already know. I talk about 64K all the time. It's super, super important. So let's go get our daily close. We will return to the 4-hour time frame a little bit later on in the video. I'll tell you more about the 4-hour break room then. But our daily close yesterday was 63.4K. Now there's a couple things that are important for us to note about this particular movement on the chart. First and foremost being, so 3 days ago on Monday, we had our initial break down below both the daily SMA and the bottom band of the downtrend anchored VWAP after several days elevated above it. So 2 full body candle closes above it, and just in general we were chopping it in favor of the upside way back on Wednesday, August 5th, all that time ago. But what we have now seen pretty clearly here over about from Tuesday to now. So Monday we had our initial break of both of those. Tuesday, what was the first thing that I said was going to happen? We were going to check. We're going to make sure there's a child checking to see if their parent is behind their fingers in a game of peekaboo. The price of Bitcoin wanted to make sure that we could still reclaim the bottom band of the downtrend anchor VWAP as well as the daily SMA itself. What did it find out by daily close? That it was rejected off of both of those points, closing right on the bottom band of the downtrend anchor VWAP. What did that do for the price? Well, it wanted to check one more time to make sure that those signals are in fact bearish, not bullish. It got healthy confirmation of that, closed way below both of those levels. Our second full body candle closed below the daily SMA. Both of them still tagged though. So what's important to note about today is, technically speaking, today will be the first full body candle close fully disconnected from the daily SMA, because at the moment again, we have seen rejection at 64K. And what is the daily SMA at the moment? 64K. So I do think we will probably tag it again within the next couple of days, I guess, depending on this guy right here. This is important. I talked about this in the membership as well. We've seen a pretty significant period of compression here on the bands. That looks like it is opening to the downside. On the 4 hour, it looks more likely that we can get a bounce, but on the daily time frame, it looks like it wants to open up to the downside. And I've talked about this 62.5K Fibonacci pivot multiple times, where to me, that's kind of the next point where I'm going to wait for the price to hit at least that before I think about closing my short. And really, I'm going to pay very close attention at that time to, why should I close this versus allowing the price to retest towards my original targets for August, which subscribers are already aware is closer to that 57K, 59K support. But I don't know if I believe that anymore. I've basically abandoned the 2018 correlation. Like it's no longer useful. We're kind of flying blind. So I'm taking what the chart actually shows me, which brings me to this is a point that I want to make before I move to the higher time frames. Specifically, this guy. This is our crossover in March into April, and you'll notice similar pattern where we've got an initial drop that disconnects us from both the bottom band of the downtrend anchor VWAP as well as the daily SMA. We spent a long time disconnected from both. Price is initially able to mount enough pressure to get back above the daily SMA. It finally then gets above the bottom band of the downtrend anchor VWAP. What happens? It still gets rejected, but there's a crossover specifically where the moving average gets higher than the bottom band after spending a long time, like a month plus, disconnected from the band. We see initially that pulls the price down lower. The daily SMA continues lower, but then what happens? It immediately has another crossover, and it then responds quite strongly in that case and stays elevated above it again. So the part of the pattern that we can infer at the moment is just this guy. It's just the actual crossover, where it does look like that. So we've had a similar circumstance. The bottom band of the downtrend anchor VWAP in this particular case is a lot lower, more consolidated than sharp drop in this particular instance. But same thing, where price gets disconnected from both. We then have a period of time where we reclaim the daily SMA, admittedly weaker than in that example I just gave for April or March into April rather. And then price is eventually able to push above the moving average. And then we see this crossover, very similar, which I've been calling out for the last couple of days, that's what that looks like to me, is that now we are going to see this moving average break below the bottom band of the downtrend anchor VWAP, which on the daily time frame is about 63.9K. So we've talked about 63.8 before. I really just think of 63.8 being rejection of 64 is how I think about that. So that would be important, again, for us to see. In the same regard as we got full body candle closes below the daily SMA. Yesterday technically was our first full body, let me rephrase this. We closed below the bottom band of the downtrend anchor VWAP. It is not yet a full body candle close below it. And I would kind of anticipate that might actually be tomorrow or from 5 p.m. PST today into tomorrow, because we've seen wicks at least above it. So again, on Tuesday, the candle opened right on that level, closed way below it. Yesterday, we then reclaimed it, even though it got rejected off of both of those levels. And then today, same thing. We have been rejected off of 64K, but that daily SMA will continue to get pulled down lower, where we will interact with it at some point. It just will probably be at 63.5 or 63.8, I would imagine. And that could be, again, when we actually see this crossover with the moving average going to the downside, which is initially going to be downside pressure. If, again, this is the best fractal we have for this at the moment. That would initially be downside pressure for the price. You can see it kind of recovers above it, and then once it has a clean break down below the bottom band, it just continues to trend down lower. This, again, for us would be, I think, as low as 57, but I don't know if I really believe that. That was really my base case for the second week of August based on the 2018 correlation, and I don't think that's useful to us anymore. So I'm really thinking about it more as 61K support is pretty important if 62.5K is found to be insufficient. So that's kind of my base case. I would be looking for that more than I would be looking for a guarantee of 57. But I would still expect it to behave in a similar fashion where it recovers it fairly quickly. So what we're going to want to watch for in the next couple days into the weekend is if we do get this crossover where the daily SMA is pulled down below the bottom band of the downtrend anchor VWAP, what is the price doing at that time? Is the price reacting very strongly to whatever that bottom is, which in this case takes about a week once it's fully disconnected from, like, we're still holding on to it at the moment. That I would say is the biggest difference between 2018 to now is we're very needy with the daily SMA. In 2018, if we were disconnected from it, we were disconnected from it for a period of time, and it was normally pretty violent initially when it was disconnected. Whereas thus far, at least in this section of 2026, we're very, very clingy to it. Like, a price does not want to give it up. At this point in the 2018 chart, we had a full rejection in June. We didn't even tag it. Whereas, again, we were chopping it pretty healthily during that time in June of this year. So I don't think that there's really a guarantee that just because price is disconnected and we're seeing compression open up into expansion to the downside, I don't think that that necessarily means that we are not going to get another tag in that direction. I just think that by the time we actually see a daily SMA interaction, it is going to be lower than 64K. And why is 64K important? Well, let's go over to the higher time frames to get evidence of this. Subscribers are already well aware of this, but what are we typically looking for in a bear market year? How many green candles do we get? Typically between 3 and 4. Since we've already printed 3, that means we have accomplished an equivalent amount of 75% to 100% of the green candles that we would expect. Now, we've got a little bit of tomfoolery on the chart with specifically, it looks like it's fixed itself again, it looks like. So the July candle closed at 62.8K. And there's been some discrepancy on the chart whether initially August regarded as an open at 64.2 instead of 62.8, which kind of has been why I think we've been having so much volatility in this range, because we needed to have the gap fill down towards 62.8. Of course, at the time of my recording, price is still healthily above 62.8, but what we would anticipate typically is another red candle for the month of August. Now, it makes sense for it to be really fighting at the moment. I think primarily just because of the ETF flows and them trying to really overcomplicate things with the Clarity Act. The last minute little effort for them now to have a vote when they get back on September 15th by Senator Majority Leader John Thune. I think that's his name. I don't know. This is a Bitcoin channel, guys. Anyways, I think that that's the only thing that's kind of holding the price up. But if we go just based on how the price typically behaves in a bear market year, what do we see? We got 2 green candles, 3 green candles, 4 green candles, and that's it for the whole year. What do we have for 2018? Same thing, 1, 2, 3 green candles, and that's all we get for that year. So that's the broad assumption that we have to make based on what the chart tells us. So we would have to assume that something has radically changed. And again, those are the only 2 examples that I can give you of something radically changing, is that the ETF flows are objectively, I think it's a big slap in the face of crypto that $130 million worth of cold card Bitcoin was stolen. I don't know if it's just Bitcoin or if it's other altcoins, but when I see news stories about it, it's specifically Bitcoin. So maybe the total losses are more. I do not know. Regardless, for the ETF inflows that week to be something to the tune of like 600 to 800 million, that's a pretty big slap in the face to Bitcoiners from the industry itself. So I'm not discounting the possibility that we could see paradigm shifts into what would typically be weakness, given that the stock market, gold, pretty much all risk on assets are still doing pretty well at the moment, other than Bitcoin. Obviously, Bitcoin is in pretty dramatic downturn, but that's okay. We can profit off of it very well. I think I'm at like 460% this year trading this Bitcoin strategy that I deliver here all the time on YouTube. If you want to hear more about that specifically, breaking down more how the strategy works so you can do it on your own, you can watch the video at the very end of this video, Bitcoin Advanced Trading Course. I do my best to give away pretty much everything that I learned, at least up to that point. I do think I'm better at it now, but let me know in the comments down below if you want an updated version of that advanced course, or like a specific thing. If one specific point needs more clarification, you let me know. I'll make a video about it. Anyways, so broadly speaking, what we're seeing at the moment, same as on the lower time frames, when on the evidence on the lower time frames, what we're seeing here is in the month of July, what we had was a retest, which is what we talked about. We had talked about that in June, that I anticipated we were going to get a lower high into June, or into July rather. I got so many mean comments about that, guys. It was great. Not here on YouTube, but on Threads. Like, people were rude to me during that time because they did not think that we were about to see a lower high. Of course, we did. It was just lower than I thought we were going to get. That's when I thought we were going to get a move to as high as 73.8K, and that did not occur. It is now seeming like I'm not the only one who felt that way, because I am seeing a lot of other channels talk about, initially they were talking about 76. I have now seen those same channels have kind of walked down their estimate towards 73K. I am of the opinion it would be more likely 73K. But I think I'm still anticipating from the 2018 correlation. That high for September was like September 4th. So it was very early on in the month. And then the price drops pretty aggressively at that point. So I think what we're probably going to see for August, I wouldn't necessarily anticipate that it is going to close bullish. So again, that would be any price above 62.8K. What I would anticipate is it's probably going to not close very much lower than that, though. Like, I think it's really just going to hold on for the majority of the month and then start its move upwards towards the very end of the month, sufficient that we could get a blow off top. I mean, I think if they come back on the 15th of September, I think that our blow off top is not on the 4th anymore. I think it's on the 15th of September, quite frankly. Because if they come to a decision of vote and it does not get passed, there's no way to interpret that as bullish for the price, period. And I'm not positive. Again, this is a Bitcoin channel. I'm not a politician expert. I'm not positive if they actually are voting on the bill or if they're just voting to vote to see if they have enough votes for the bill, you know. So I think that news event is going to be pretty important. I think it's going to pull the price a little bit higher than we had initially anticipated, which again, based on the 2018 rather, correlation would be closer to a 57K retest. So it could be that instead we see August be basically flat, sufficient that we get an early move into September that then allows us to fulfill a full red body candle by closing wherever, below wherever the August low was, which in our case at the moment is 62.2. So I don't think it's unreasonable for the price to close in August above that. Again, I think we're going to have probably a strong reaction to 62.5. I don't know that 62.5 is strong enough necessarily for us to stay elevated above, but it kind of just depends on if you believe we're going to get a drop prior to September 15th, or if September 15th is going to be the do or die, like we're just going to kind of trend upwards and sideways until that point, and then we'll reject really hard after that. Which, even as I'm saying it, I see the logic in that. That does make sense to me. So I would be a little bit more cautious about the 2018 correlation, specifically for a 57 or 59K retest at the moment, making these support levels that I've talked about multiple times on the channel kind of irrelevant at the moment. That being, again, the monthly candle closes for March and April of 2021 and October and November of 2021, and then a support level found between April and May of 2024, because the older levels were still relevant in 2024. Like, this is rejection of that 61.3K level. This is confirmation of support at that same level, and then same thing with these guys. That's confirmation of support at that 58.8K level when these candles closed at 59K. So again, 59K support, going to be very, very important. The price will trend back there. Again, whether that is August or September, I am kind of, I don't want to say I'm impartial, because I have a lot of money to the downside. So I definitely would like it to happen sooner than later so that I can flip to the other side of that trade. But that's what I'm looking for at the moment. On the way there would be strength at 62.5 or 62 itself. But to me, 61K is a little bit more important than that. So I could see the argument for, in the month of August, we initially see a move that is weak at 62.5 that goes down towards 61, that then finds support at 61 and can rebuild at 62 on our way to wherever the monthly close is, which again, if the monthly close is above 62.8, then it will be regarded as bullish, which would be uncommon at this stage of the cycle. Not impossible, but we actually haven't seen an instance where there's been two sets of green monthly candles in a row, We have seen multiple times in bear markets here where there are two green candles right next to each other, but there's only ever one pair. It has not been multiple pairs yet. So we would anticipate probably that there's going to be downside pressure towards the monthly close then, where the first 2 weeks of September where would be a strong reaction to the upside from that. So broadly speaking, wherever we are at, what is today? Today is the 13th. That's still what I'm thinking, is that we're going to head down towards, I'll show this on the weekly time frame as well. We've already seen retests over here as low as 62.2. So 62.2 has been found as support twice already. We can also interpret this guy here, this is 61.7, as functional strength at 61K itself. This also as well. This is a low of 61.2. So what is that confirming for the price? That 61K at the moment is safe. That's over in July. So we're pretty disconnected from that at the moment, and it really just depends. Same thing as the lower time frames, is we now are starting to see a crossover from the bottom band of the downtrend anchor VWAP and that 64K Fibonacci pivot itself. So this is a bit different than the moving average ones. Again, I think about the Fib pivots as concrete walls. I think about the moving averages and the bottom band of the downtrend anchor VWAP as more magnetic forces. Just as a reminder for anyone who's not familiar with the channel, you can go over here underneath forecasting, go to anchor VWAP. That's your squiggly line guy. You drop that on a candle of your choosing. Gives you a lot of great information. And this is your anchored volume profile, this guy over here, which basically tells you how many people bought or sold at particular levels of the chart. Oh, this is breaking news, guys. I'm learning this as I'm saying this to you. The point of control on the weekly time frame, and possibly the monthly, nope, just the weekly so far, has dropped to 64K, not 66.9K. I've been talking about this for like a week and a half. This has been something that I've been looking for. So what that means functionally, I'm such a nerd, guys. I just got so excited for that. So what that means functionally is that 64K is now the point of the chart where the most human beings have pressed buy or sell. So that it has the most psychological weight. So not just what I'm talking about for the price perspective, but also from a human perspective, it has now shifted where that actually is where people have had to make a decision. The most emotional weight has been centered around that level. So for me, in the long term, this is a healthy thing for the price. This, as we build more and more volume at lower levels, that's a healthy thing for the price because we can continue to trend above it on a long-term basis. On a short-term basis, it makes a move back to 66.9K less important. It's less important. Like here we have a neon sign that is telling us which direction to drive. We no longer have a sign here that is telling us explicitly continue or back away. Whereas subscribers are well aware of this. So when I called out that we were going to have a rejection off of 83K, I called that out in February. We had that in the first week of May. How I was able to anticipate that was, one, that's where our middle band of the downtrend anchor VWAP was. So again, I called that out months ahead of time. That's, I think, my best call of the year. I think it's the best call I'm going to have all year. So not only do we have a move back towards the weekly SMA, which was highly anticipated based on the 2018 correlation, but our local time frame, we anticipated a rejection off of the middle band. Because essentially how this works, it's a little bit easier to see it on the Elder VWAP. This is the one I have drawn from 2011. So specifically the pattern that we assume to happen over the course of a bull market is we see consolidation and then a bell-shaped expansion period for both the bands. So the bottom one obviously expanding to the downside, the top one expanding to the upside. Broadly, what happens over the course of a bear market is we will get pulled back towards that upper band. We have never, at least since breaking correlation from it, we have never retagged that middle band. What that means is we have a sufficient amount of strength when we touch the upper band where it makes touching the middle band unnecessary. The price does not need confirmation of it. It has it already. It continues onward at that point. And it is very important. This tool on the weekly and the monthly time frame it will tell you when the bottom is. You don't have to look on the news or even here. Just use that free tool that I already told you about. And it's going to tell you pretty clearly, okay, we've spent X amount of time below the upper band. We would expect at a certain point it starts to recover. And that is typically from the flip over of the bear market year into, midterm elections are done. Now it's the next year. In general, everybody wants things to be bullish at that point, and that is when we start to see a move to the opposite end. So in a similar factor, where the downtrend anchor VWAP is more recent, this is from October, so it's much more recent, much less information. Therefore, we tag it more often. We have interactions with it more often. Now, I don't actually know because I haven't used this on older cycles, but what I would imagine the trajectory is going to be of this downtrend anchor VWAP until I'm no longer using it anymore, whereas I will continue to use the elder VWAP, is we've seen a disconnection from it. So it's disconnected from both. It has not tagged the upper band since. It has fought multiple times to get at the middle band. It has rejected it every time. It has not even been able to break the middle band after its initial rejection of it over here in October. So that, broadly speaking, told us again on the local time frame, confirmed with our correlations with the 2018 time frame, that we were going to see rejection at that point. What was the other thing that made me very confident about that call, again, months ahead of time, is right here. This is the anchored volume profile. And nobody cares about that level. Nobody cares. Nobody bought it. Nobody sold it. That is a significant gap of individuals from about 72K, 71.6K, and about 86K. Nobody cares at those levels, guys. Now, partially, that's just because we haven't spent that much time there. We shot right through that when we first got there in 2024. We chopped back down to it fairly briefly in that gap in 2025. And not that many people were paying attention. Only a couple people were paying attention between about 75 and 77, it looks like, which are right at the lows there. And then when we tagged it over here, it looks like the significant portion of the volume is just higher, you know. So basically, not enough people have an emotional bias towards that level, which means it's very easy to bully that level, is how I think about it. I will be having this inverse conversation with you guys at some point, probably in Q2 of next year, to the flip side of this, where suddenly 83 to 86, despite there not being very much volume there, it's going to be very easy to bully it to the upside instead of bullying it to the downside. That's just not where we are in the cycle, and I am not someone that believes that the 4-year cycle is dead. I don't even see people saying that online anymore at the moment, because it's just clear that it's not the case, that it's still doing exactly what we expect it to do. So with a lot of rambling, let's bring it back to reality. So specifically, we've got this crossover of the bottom band of the downtrend anchor VWAP over what is now both the point of control as well as the 64K Fibonacci pivot. So it's a slightly different price, but I don't care, guys. That's identical as far as I'm concerned. It's off by a few dollars. That's big. That's important, because now, instead of us we had our rejections over here, which again, we now can't even see on this time frame. I'm actually curious if it is still higher on the daily time frame. So on the daily time frame, that's when we have our rejections. We have our rejections on June 15th and 16th, and we have our third rejection on July 21st. So that's when on the daily time frame, we snap below that 66.9K level, which is why the price reacted so harshly to the downside in both instances. So what we've been trying to ascertain at the moment is, have we established an uptrend now? And I don't really think so. I don't have enough evidence of that. I think it's more likely, again, that we get another retest towards 62.5K at the very least. If it forms support there, that's where I would be concerned about an uptrend. But again, for me, a retest of 57K is not off the table. And 61K, I think, is more realistic based on how much chop there has been, specifically around the daily SMA. And then also just, I think that they're going to do whatever the hell they can to try and keep the price elevated until the news on September 15th. And again, I would anticipate the price is going to sell off really hard if it's anything other than the bill being passed. So yeah, I would expect that's probably our relative top, as opposed to it being the fourth, unless it's clear, like, whatever, 4 or 5 days before that, all of the Democrats are like, no, we're not voting for this, we're going to vote against it. It's like, all right, well, then the market's going to have that knowledge priced in ahead of the time. So again, I would anticipate whatever local top we are able to mount, which for me was 64K when I was originally talking about it. Now I'm seeing a lot of people talk about 73. It's not impossible to me, guys. I've gone over that. That's what I went over last weekend, like the possible reasons why we could get a move there. But I think broadly speaking, our best case scenario is that we're going to get rejected off the weekly SMA again. The weekly SMA is currently at 69K. So for me, it's not very likely that it's going to shoot much higher than that, and about 7% above that is that 63.9 or 63.8/74K target that I've talked about multiple times, and that's about the best move that we get, at least in the 2018 cycle. Is I think an equivalent. I think it's more like a 14% move off the average, but we would not anticipate for it to be quite as volatile as that point. So what we're seeing now, again, on the weekly time frame, and I would imagine this will follow on the monthly probably within another 2 weeks. We'll see. It may be dependent upon the weekly close. But we're in the middle of the week now, and the point of control has already moved down to the 64K level. So what we're now getting is that this candle was a rejection of the point of control and the Fibonacci pivot. So obviously this is retroactive. So at the time, the price regarded as a rejection of the actual point of control as opposed to where it is now. But if we're looking at this again from where we are now, that is how the price is going to regard that, as that is a triple rejection, not a double rejection. This is a triple reclaim, not a double reclaim. This is a triple rejection, not a double rejection. And the moving average, or rather the bottom band of the downtrend anchor view up, has now rejected both the point of control and the 64K Fibonacci pivot, which again would indicate to me that the price is going to continue to drag the bottom band down further, at the very least. Nothing really preventing it, again, from beginning to trend upwards. But broadly speaking, what we would expect, I think I kind of started explaining this and then I got distracted. Similar to the downtrend, or the Elder VWAP rather, what we would expect, broadly speaking, is that eventually we will be disconnected from the bottom band the same way that we are disconnected from the top band during bull markets. So during bull market, we are disconnected from the top band the entire time until the very end of the bear market, where we touch it, find support at it, and then continue on our merry way. So what I would anticipate is we are spending most of the time with the downtrend anchor VWAP, chopping that bottom band and getting rejected off of the middle band. And I do not see any circumstance where we are going to retest that middle band. I think that the middle band has to come down significantly lower before we're going to have a retest. I would be very surprised personally if we see another retest in 2026. That's, again, at the moment on the weekly time frame, that's about 79.6K. I do not see that. Me personally, that does not make any sense to me at all. A weekly SMA retest makes sense to me. If the price does what I said it may do earlier on in the video, where we either continue to chop here and we either see a violent move down towards 61 now in August, or again, we kind of chop based on the uncertainty around the news, we see our rise higher, I would anticipate then a retest of the weekly SMA during that first or second week of September. And that's where we see a violent rejection at that time. But I would, regardless of what the price does to get to that weekly SMA, I would anticipate a rejection, because what happens every time we tag the weekly SMA during a bear market year, guys? We reject it. So it happens literally every time. So until we get to the other side of midterm elections and until we are in the pre-halving year, I would anticipate to see weakness on this particular tool. Not necessarily full body disconnection, but that does happen. You know, we have multiple instances where it spends weeks, plural, below that bottom band of the downtrend anchor VWAP. That's what it did for June, you know? Like, we just initially reclaimed it, and it wasn't a very strong reclaim. Here is a strong reclaim. This is not a strong reclaim. So it could be, again, that instead of needing to have the 57K retest now, we may actually have that 57K retest in September. That is still broadly my opinion, based on the 2018 correlation, is that we do not see the absolute lows until October or November. I think there's a number of reasons for that, as well as I don't think that we see the absolute lows for Bitcoin until there is structural weakness for the stock market. When there is structural weakness for the stock market, Bitcoin will react, period. Like, if the stock market drops by 8% or something like that in a day, Bitcoin is going to react negatively that day, period. It is an important correlated asset, but it is not immune to major drops in the price of other larger asset classes. So, broadly speaking, what am I looking at? in the next couple of days. Well, as I talked about earlier on in the video, primary focus for me is that crossover of the daily SMA and the bottom band of the downtrend anchor view up. Downtrend anchor view up pretty clearly still sloping downward. I don't believe that changed even in this instance of the crossover. That continued, that remained the same. So again, the daily SMA was able to recover pretty healthily above that, and same thing, rejected the middle band of the downtrend anchor VWAP at that time in May. But what is clear about that pattern is that the downtrend continues to be a downtrend. The bottom band of the downtrend anchor VWAP would not magically start to slope upward. It's the daily SMA that could potentially begin to slope upward, but we would see confirmation of that, I would think, probably within about a week from now, because within about a week, the daily SMA will have broken below the bottom band of the downtrend anchor VWAP, which again will initially pull the price down lower, dependent upon where it forms support. That would potentially allow that sharp recovery similar to here, where the daily SMA pulled below it and then was able to recover back above it. So that's what we would be looking for at that time, which for us is the same level that I've been talking about, 64K. So that would again mean we show structural weakness initially that either brings us to 62.5, 62, or 61K itself. I'm sure that there's levels in between 61 and 62 that are important, but I don't really see them on the chart at the moment, to be honest with you guys. 61.5, I guess, and 61.3. But broadly speaking, I would regard both of those as 61K support is more how I'm thinking about that. And that would be dependent, again, upon the reaction to 62.5. But this period of compression here on the daily Bollinger Bands, I am paying attention to. So we compressed initially and got rejected off of tagging the upper band. Now on the 4-hour time frame, it looks a little bit less clear. So this looks like we're about to enter that period of compression, and it's pretty common in an instance like this that we'll tag both sides of it, which would actually mean we're more likely to end up heading to the upside than to the downside, at least from the 4-hour perspective. But that could be negated by another rejection of the 4-hour SMA, which I will be going over with the 4-hour break room membership as it happens. I try my best to give some type of note when we have 4-hour SMA retest or interactions with the Bollinger Bands. The Bollinger Bands are your best entries. Again, you can watch that, the advanced Bitcoin trading course that I have tagged at the very end of this video if you want to learn more about that. Those are our best opportunities, is when we have band interactions, but the 4-hour SMA itself is going to tell you, okay, I should be out of this scalp, or I should be, ready to prepare for whatever your bias is, which for me, guys, I'm in 2 trades a month at most, and I'm closing 1 trade a month, at least specifically for the swing strategy for Bitcoin. If you've been subscribed long enough, you know that already. Also, guys, yesterday was 1 year of Bitcoin Escape Plan since I created all the channels, which is pretty dope. Pretty excited. I don't remember if I said that in yesterday's video or not, but that is pretty cool that it's been a year since I've been delivering public analysis. Well, actually, longer than that, I guess, for delivering public analysis, but at least under the Bitcoin Escape Plan brand has been about a year now. Woo! Some type of party in the chat. Give me some comment love. Anyways, broadly speaking, that would be the main thing I'm looking at, is on the daily time frame. It could apply the same logic. It's not quite the same though. For when we have periods of compression for the daily time frame, we don't necessarily tag both sides of it. So if the price has already made its decision that is a rejection of the upper band, on the daily time frame, we would not necessarily anticipate it to swing back to the other side. Now, over a long enough time period, yes, of course, it will still swing back to the other side. But typically speaking, in a period of compression, once the price has made a decision about which side it wants to trend towards, it sticks with that decision until the next period of compression, which in our case could be weeks away. So if I'm looking at it purely from the daily time frame, I would expect significant pressure towards 62.5. And again, if weakness is found there, I would be watching 61K itself, 61.3K and 61.5K being important targets within that. Looks like 61.8 as well. I would regard that as 62K support, however, or resistance, I guess, depending on which side the chart is breaking to. But broadly speaking, that's what I'm looking at, is that crossover of the daily SMA down into the bottom band of the downtrend anchor VWAP, but we've already seen that on the 4 hour. Now, I haven't studied this as much on the 4 hour for crossovers because it happens a lot more often, obviously, than the daily time frame, but very similar pattern where we're seeing a crossover where initially this will pull the price down lower, and this period of compression would be the main thing that I'm looking at, where there is a possibility for us to tag back towards that upper band, which would be at 64.4K. And that would again be predicated upon whether or not we are interpreting this most recent attempt at 64K as pure rejection or whether it's just temporary rejection. And I'm not sure yet. It does look pretty handily to me like we rejected 64.4 and 64.2 in succession, and then 64 was also found to be, we couldn't even touch it, you know? So to me that is pretty significant since it's such an important level. Again, I didn't know that. We learned that together live on the chart on the weekly time frame. That is what the point of control now is 64K. So that puts a lot of pressure on whatever the weekly close is this week. And again, it's gonna, if it closes anywhere where it is now, it's going to read now as a triple rejection of both the bottom band of the downtrend anchor VWAP, the point of control, and the 64K Fibonacci pivot. So for me, those are the two ideas that I'm trying to keep in my head, is that we've seen a rejection of the 4 hour SMA now multiple times in a row. Now it's always possible that we see another retest of that. And again, I'll go over that in the membership when we see that. Also guys, the only place you can get a discounted rate on that is down below in the description, or if you are subscribed to the email newsletter, I send that out in the daily emails. Otherwise, if you go to the website, you're just gonna see it at full price. So if you do wanna try out the membership and see what I think when we're seeing the most important interactions on the chart on the 4 hour time frame, go down description below. Leave me any comments, questions, concerns that you have about that as well. But broadly speaking, daily time frame is telling me that we're going lower. The 4 hour time frame is telling me that we're about to have some volatility in the next, I would say 24 to 48 hours. But the 4 hour SMA itself has dropped down to 63.7K. So how I would interpret this is if we show significant weakness again at the 4 hour SMA at that 63.7K level, what does that mean, guys? That means it's even more confirmation of weakness at 64K. That 64K is in fact resistance, and that will probably pull the price down lower, at the very least to this 62.9K level. 63.3 is also quite important. We are currently below that. That's been very important. So the fact that we are below that, I would not ignore. We got about 2.5 hours left in this 4 hour candle, so I'd be paying attention to that. And then we only have one more 4 hour candle after that until the daily close. And at the moment, we are a full body disconnected candle from the daily SMA itself. So technically speaking, at 5 p.m. PST today, the first thing I would assume that the price is going to do, this is again based on it closing exactly where it is now at about 63, 63.1. I would assume it's going to head back towards the open of the day, 63.4. And we've talked about 63.5 a bunch of times. So I would assume that's the first thing that the price is going to want to do at 5 p.m. into the overnight session, or rather the Asian market session, is it's probably going to want to see if 63.5 is actually resistance. And when it finds out that it is, then I would assume that the 4 hour time frame will continue breaking to the downside the same way that the daily time frame is already telling us. That's what the charts are telling me at the moment. I, of course, will be back tomorrow. If you have any questions, comments, concerns, leave them down below. Join the membership. Go check out the website, bitcoinescapeplan.com. Have a wonderful day, my friends.